I actually got into the industry years and years ago, just before the collapse of Northern Rock. From what I've been able to understand, obviously house prices actually have gone up through COVID.
Yeah, they have.
I believe that it's a lot of people moving out of London or even out of their flats or smaller houses in Tunbridge Wells. So the sweet spot seems to be somewhere between 1 million and 2 million. Lots of weird stuff has happened in the last few years, actually.
Hello, my name is Nicole and welcome to this week's episode of the Big Chat. We've actually had a little bit of a breather. We did a big run up to Christmas with weekly episodes, which I love doing. And then over Christmas, we were road showing at Castlemas, which was so much fun with Hannah and Ollie, and absolutely loved doing that. Some amazingly good fun Insta lives and episodes that we did with the guys over there. But yeah, and then we got to January and we kind of needed a bit of a breather and a bit of a break. So we took some time out and kind of regrouped and thought about what we wanted to do for these episodes going forwards. Obviously, we also do the soapbox race, so we're getting really busy with all of that. But I was thinking, what sort of guests would I like to have on around this time? Now we're sort of February, March, and I don't know, I'm really interested in finance and mortgages and all kinds of investment opportunities. And especially at this time of year, I think it's something that when we get into the end of tax returns and all kinds of things like that, a lot of us are kind of, what do we do? And with everything we've gone through. So I met a very interesting chap at, I can't remember if it was a dinner party or where it was, but very interesting chap. And I thought, I need to get him on and have a chat with him because he's the man that's going to know. Certainly his mortgage knowledge is phenomenal. So I'm really delighted to introduce you to someone that I've been getting to know recently better, which is Pete Amor from Amor Financial.
Hello.
Hello, Pete. That was a long introduction, wasn't it?
It was, yeah.
That was like, blah, 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 blah.
I wasn't sure if I should jump in at any point.
Yeah, that's your cue. What are you doing? So for people that have not come across you before, we always like our guests to kind of give a little bit of a summary of who they are and what they do. Could you do that for us, please, Pete?
I'll do my best.
Thank you.
So, well, it's all about mortgages, isn't it? So that's who I am today.
Yeah, that's who you are today.
So I've been running Amor Financial for 6 years, went self-employed. I actually got into the industry years and years ago, just before the collapse of Northern Rock. Yeah, so it was a very different thing back then. It was lots of self-cert mortgages. Just as a quick reminder, that means that people weren't actually having to show what they were earning. They could just say, I'm earning this, and a bank would believe them, which seems quite crazy now.
Doesn't it?
And that's probably why a lot of the system collapsed because of that. So now it's really tightened up. A lot of changes in 2014.
Yeah.
And I was actually out of the industry for a few years and got back into it when I saw that mortgages were starting to take off again, because it was very difficult actually advising people during the recession. A lot of the lenders just tightened up, and I just started, so I didn't have many clients. So 6 years ago, started completely from scratch, no clients at all. And I was buying internet leads, just trying to advise people that I didn't even know.
Wow.
Building up from that. And then it's developed and it's becoming much more Tunbridge Wells centric these days.
Tunbridge Wells centric. I love that. I like that. That's really quite brave as well, to just sort of got no leads at all and a difficult market. And just, I mean, one of the things that we love doing on the show is talking to entrepreneurial people and, you know, people that started up their business. What were you doing before that, 6 years before?
It's another long story.
That's okay. We've got some time, Pete. We can talk about it today.
Well, I did run a business until 2011.
Yeah.
So I didn't get straight out of the industry during the recession. It just got harder and harder. Yeah. And then I went traveling for a bit after that. And I didn't think I would ever come back into the industry, to be honest.
Yeah.
I thought that was it, really.
Yeah.
My experience wasn't that favourable, considering it was a recession. And then a friend of mine continued in the industry and talked me into getting back into it.
Yeah.
So I joined his company briefly. And actually 2 months after I joined him, that's when Brexit happened.
Oh my God.
and that's when we had the vote, and it felt like the world was going to end. And it's felt like the world's going to end quite a few times since then, hasn't it?
It really has, yes. It continues to do so. Yeah.
So it somehow survived this far.
Yeah.
And
What do you love about doing what you do? Like, what makes you keep doing it and keep going? Like, you've obviously come back into it in quite tough times.
Yeah. I should have an immediate answer to this question, but it sort of changes. I've got to evolve with the business, and I've taken 2 people on over the last couple of years. There's someone else starting in April. So my role is developing from technician, doing... I would say when I first started, the mortgages that I was attempting were a lot easier than the ones that I'm trying to get into now. And so it is that challenge of evolving with the business, really, and understanding some of the technical points that are involved in mortgages. There are so many different ways of looking at finance in every single situation. So I suppose that's it. It's having a chat with someone, trying to understand their position, and then trying to figure out the best way of approaching it. And that's the bit that I like, I suppose, as well as running the business.
The problem solving.
Yeah.
Because it is, I mean, like you mentioned, when they were sort of self-cert mortgages, and certainly even back when I first got a mortgage, it seemed much easier. It was much more straightforward. I mean, everything just seems more complex now, doesn't it? But especially with even the size of deposits that people have to get now, if they want to get a property, that's changed dramatically as well, hasn't it? Because you did used to not need quite as much of a deposit, did you not? That's a long answer as well. It's moved and changed. So Northern Rock, they were doing 125% mortgages. I mean,
it seems
brilliant.
I know.
So they gave you money?
Yeah.
I mean,
so if you had a property that you were buying as even a first-time buyer, and you could develop the property, you could renovate it a little bit, they would give you more than the value of the property to do that. I mean, you can't, that's a completely unregulated thing to do now. So you can still do that, but you'd have to take bridging finance, which is a lot more expensive, and not many people are brave enough to use that type of finance. You've got to be quite entrepreneurial to really see the benefit of it. The current position with residential mortgages, you can actually borrow at 95% because the government reintroduced it. So during the recession, it came all the way back. I think you needed a 25% deposit even for residential after the credit crunch. That's if memory serves. And then since then, it gradually got easier and easier. People were able to put down smaller and smaller deposits. We've not gone back to 100% mortgages, but 95%.
It's pretty close though, actually, isn't it?
Yeah.
Because I think actually I do remember it when it was 25%. That's a lot. 25% to find a deposit. And
that would be a typical position on an investment property.
Okay.
Although more and more lenders, I get emails every day, you can't keep up with all of them because there are so many lenders out there. But I've seen several lenders now saying we're launching buy-to-let 80% rates. So
really?
If you only need a 20% deposit, in other words.
And do you think, I mean, with buy-to-let mortgages, are they quite straightforward to get alongside residential mortgages? Because, I mean, I myself, I've got, obviously, as you know, I've got like a buy-to-let, but I lived in it for a while. Now I don't live in it. So it's gone on to a, whatever it is, percentage over or something. But it's not a buy-to-let mortgage. I've never gone out and actually purchased one. Is that a similar process or is it quite different?
Yeah, you're like an accidental landlord.
That's exactly it,
So the original lender's given you consent to let that property.
Exactly,
And until you move away from that, once you move away from that, depending on the lender, most will class that as a pure buy-to-let at that point, as an investment. They won't class you as accidental anymore.
No, and I appreciate
doing it on purpose
that.
From that point.
I mean, I kind of was doing it on purpose, but I just didn't get around to doing the paperwork on changing to a buy-to-let. But I see what you're saying. But is for people out there because that's a busy market, isn't it?
Buy-to-let? Yeah. It seems to... So a year ago, if you'd asked me, I mean, pretty much all I was doing was residential.
Was it?
That stamp duty holiday. Yes, lots of weird stuff has happened in the last few years, actually.
Yeah.
That stamp duty holiday activated a latent market that was, scared by Brexit and then there's the change of government that happened. And as soon as Boris Johnson came in and people had actually voted en masse for a new government, people's confidence seemed to return for 2 months, and then COVID hit.
God.
And then once COVID hit, everyone backed off again, or so it seemed. I was thinking, what do I do now with my business?
Yeah.
And then I think it was July 2020, they announced the stamp duty holiday. I think it was July. I have to check that one.
But I remember it was around then that you had, and so you literally then saw the market.
Yeah, erupted. Yeah.
Really?
I did more. I had more calls, and I did more decisions in principle. So just processing people's inquiries through with a lender, just getting the first half of an application done, where credit checks are made by the lenders. To make sure that they were okay to buy that property they were looking at buying. I did more that month than I'd ever done before.
God.
The month of the announcement. And then for the next, 9 months, it was just, I'd never seen that much business before. It was it was quite hard keeping up with it all. Then there was a gap as the stamp duty holiday ended, and then for some reason it's more of these buy-to-let inquiries, like you said. And quite a lot more commercial inquiries for me as well, for whatever reason. People, maybe property developers, looking to purchase commercial units especially, and redevelop into residential.
I was going to say, because that's changed as well now, hasn't it? Because I know I had a friend that had some commercial property she wanted to sell, and she wanted to change over the usage, and it was like near enough impossible to do that. When did that change?
To change the use.
When did it become easier? Because they've lifted it a bit now, so commercial can be changed to residential. It's a bit easier to do now, isn't it? Or has something changed?
I mean, when you think about commercial property, a lot of retail units, Amazon. I mean, it's been looming for a really long time anyway, and then COVID just accelerated everything. So there are still some lenders that are happy to lend on retail, some commercial lenders. But generally speaking, they've backed off a little bit, actually, and some won't touch retail at all anymore.
Really?
Some of the big banks won't touch it because it's under threat. So really, and you look around Tunbridge Wells, I don't know if we're allowed to say anything like that.
Of course you are. We're all from Tunbridge Wells. Everyone sees what we see.
Tunbridge Wells is thriving in inverted commas. And you see every empty shop has this billboard. And I've seen more and more and more of them. I'm sure that's everywhere, all around the country. So what is the answer? So I guess I don't know if there's been a dramatic shift in policy necessarily, but I know that a lot more people are trying to buy these commercial properties speculatively in order to convert to residential.
I think also they're quite interesting, some of them, because even in Langton, near to where we are today, where I've got a property down the road, there was a butcher's, and there was a horse, like this old, I don't know what you call the horse places that sell horse things, but they're converting them all to houses. Some of them have been converted to flats, and they actually make really interesting properties, like to live in, residential. So, but that was, years ago, we weren't even allowed to put a fence up outside our house because it was like, no, it's changed so much. And I think with Tunbridge Wells, like you say, there's so many empty units and shops because of COVID and because of other things. I imagine that people will be thinking, well, that would make quite an interesting property to live in, maybe.
Yeah, and then you see all those old churches, don't you? That still got the stained glass, or people just people put the stained glass back in there to keep that churchy look. And that wouldn't have been allowed a couple of 100 years ago, would it?
Definitely wouldn't.
So there are more interesting properties being created. It's still a challenge, though. If you're converting a commercial unit that's surrounded by commercial units into residential, you've then got to find a lender that's okay with it being in a commercial area.
God,
lots of lenders don't really like that. And if you've got a flat if you've got a 2-story, 3-story building that's all commercial, and you develop the 2 floors above to residential, keep the ground floor as commercial. Again, it's got to be the right kind of commercial in some cases.
Yeah.
They don't like takeaways, as an example, or pubs or restaurants. And even next door, they don't like that. So it's got to be the right type of property. With the caveat that there's always a lender for something. So it's just most lenders don't like that, but there are always the outlier lenders that have a niche.
So you must have to do, you must be quite patient. Just because you must have to do a lot of backwards and forwards and a lot of fact finding and like you say, you're finding out about someone's situation and then you're matching a lender to the right person and the right project. That sounds like a lot of admin to me.
It's a lot of admin.
I like to delegate.
Yeah, me too. Yeah.
I'd just be like, oh, that's giving me a headache. Suzanne, where are you? Can you help me? But is that one of the reasons why it's good to have a financial advisor or a broker, mortgage broker working with you, would you say? Because
that's one reason.
Yeah.
Yeah. Another reason might be actually that you've got to present it to the lender in the right way.
Yes.
You've got to explain things. Yeah. And you might not understand what a lender's asking for. I don't always understand what a lender's asking for. And they don't always understand what they're asking for.
Yeah.
So my job is to understand their criteria. And generally speaking, even when I call the lender, depending on who I speak to, they might not understand their own criteria and have to ask someone else for help. So it can get a bit complicated.
Yeah.
And it's also knowing who's going to look at this in the first place. There's all this criteria, like we were just saying, above a commercial. Who does that go with? Who's the best lender for that? And partly through experience and partly through research, I find that out. Yeah,
because when you started out, how did you... where would you know where to... don't give away your trade secrets, obviously. But how did you know where to start with things? It must be a lot of research.
It was. I was calling lenders and chatting to them.
Were you?
That was... I didn't have that many inquiries, so I had a lot more time to do that back in those days. And I was calling lenders, having a chat with them, trying to understand where they were coming from. And they were only too happy to chat to me because I'm bringing them business, potentially. So... I suppose quite a lot of effort made in the beginning to understand this. And obviously things move and change in the meantime, and it's almost impossible to keep up with everything that's going on. But technology's evolved as well to help us with the research.
Oh, has it? So is that something, even in the last 6 years?
Oh, yeah, definitely. In the last year, we've been introduced to new technology that's really helped with the... some of the residential and buy-to-let research.
Oh, okay. So almost just like systems that are in place that will just speed up that process or make it more efficient. Yeah.
So I don't think this is giving away trade secrets.
No, it won't. Well, I suppose it's like with accountancy, isn't it? If you're a new business, even things like, there was Sage, but then there's QuickBooks and all these things now, isn't there, that help you as an employer and employee to do things. And
they link into your own bank account. So you actually, theoretically, you don't actually have to key in any transaction.
Exactly.
It does it all for you. And you can set programs so that it remembers what that transaction actually was. So not quite as simple as that with mortgages because every case is individual. And what I would say, even after all the years that I've been doing it, I'm still learning. And I don't think that's ever going to stop because there are infinite numbers of possibilities for situations that appear. So I'll have a brand new inquiry that I've never heard of before.
Yeah.
And I'll probably have one of those every week.
And how do you manage people's expectations? Because surely people must get very excited. They want to buy a house or they've seen a house because everything's moving so quickly now, isn't it, Pete? Houses are just, I literally drive past somewhere and it's for sale and then it's sold.
Oh, yeah.
It's so quick.
It depends, doesn't it? But I know there are a lot of people waiting for houses and there aren't enough in Tunbridge Wells. Particularly at a certain level where I don't want to say too much in case I haven't fully understood it myself, but from what I've been able to understand, obviously house prices actually have gone up through COVID.
Yeah, they have.
And I believe that it's a lot of people moving out of London or even out of their flats or smaller houses in Tunbridge Wells. So the sweet spot seems to be somewhere between 1 million and 2 million.
It's crazy, isn't it?
It is, and that's to buy you a house, maybe a 4 or 5 bed detached with a garden, which is what some people just simply expect.
Yeah.
So a lot of people have had to manage their own expectation, and mostly people come to me with some idea of what they can afford. I don't know how they find that out actually, but they seem to have an idea. They're looking at the right the right sort of end of the market for them.
Is it? Yeah, I mean, is there a formula that? I mean, I suppose, like you say, there's the 85, 95% or whatever. But
yeah, but in terms of how much you can borrow,
Yeah.
yes, there is. It's easier for those who are employed.
yeah,
But I'm happy to just run through all of that.
because it's really interesting. Because I know certainly when I was younger, you had to do the old 3 months pay slips.
Yeah,
That's
that's still the
3
case.
months pay slips, and it was much easier, obviously, to be. Well, I just remember my husband at the time was self-employed, and it was just a nightmare. Had I not had a regular salary,
Yeah.
it would have been much harder for us to get anywhere.
Yeah, I mean, from my side, dealing with self-employed or employed, it's just the same.
Yeah.
But from the other side, it's collecting documents. I mean, and understanding how the lenders look at it as well, from the client side. So employed, really easy,
Yeah.
Especially if you've just got your basic and no bonuses, no overtime, no commission. If you've just got your basic salary, generally speaking, I always have to say generally speaking because every lender is different, but some or a lot follow the same process, you'd be able to borrow about 4.75 times that.
Okay.
Depending on how much you earn, some lenders will go to 5 or even 5.5 times income in the really rare circumstances. So
And
it is actually possible to borrow 5.5.
And is that so? If you were say that you're in a relationship with someone, but you're not married, so you're not, it doesn't matter if you're engaged, does it? But you're just a couple.
Yeah.
And how does that work if you want to buy a property together? Does
Same.
it literally just double then?
Yeah, it just doubles. Yeah.
It just does.
And it didn't used to work like that. I'm aware that it used to be, what was it, in the 90s, that it was 3 times one income, 1 times another. You'd add them together and come up with the right. But once lenders opened up that doorway to borrowing joint 4 or 5 times income, obviously with it the house prices shot up.
Yeah.
That's probably why they're
That's
so
probably
high.
why they did.
Because people can afford.
That's what it is. Yeah.
People are getting together, buying properties, and you don't have that sort of tradition where one maybe stays at home, looks after the children. A lot of couples now both work. You've got a lot of couples in London, no children at all, or they both got, or they've got children between them. I suppose
they
that
still
makes
work.
no difference. They're both working,
Yeah.
earning a lot of money together, and then they can. They push the house price in London up, and potentially some of those same people have moved to Tunbridge Wells and pushed the prices up down here and around the M25 belt, probably.
Those Londoners, eh? Those dastardly Londoners. What about friends? Can friends kind of pool in together and buy together? Is that something that? Because I know now as a buy to let, there's more. There's a name for it, isn't it? When they're sharing, a bit like like student lets, but working people now are more likely to, if they can't afford a rental property on their own, they're more likely to look at renting with friends. That seems to be something that's becoming a bit more common in these areas. I didn't know if it was the same with mortgages, if anyone does that.
Yeah, you
like
can
a
buy
syndicate.
So a couple of answers to that, but yes, actually, you don't have to be related to the person you're buying the mortgage with.
Okay.
And in terms of syndicates, that might be more when you're investing in property, I suppose. So you might start a limited company and have multiple shareholders within that company, and then start buying property that way. That's quite a popular way of doing things.
Yeah.
Some businesses actually have based their model on it. My mind's going in so many different directions right now, and I mean. It's just happenstance. I was sitting on a train on Saturday, and I heard someone talking about a company that he works for. Just overheard the conversation.
You were listening. You were having.
He was sat right opposite me. So what can I do? And he also mentioned property. He said that probably shouldn't mention the name of the company, but it's designed to get investors. Buying into property without them going through the hassle of actually buying the property themselves.
Wow.
So you'd have an app and you'd be able to just say, I'm going to pledge 30,000 in this particular area of the country.
Yeah.
You don't have to worry about owning the house. So no doubt they're collecting money from lots of investors. They're investing it themselves in properties. They're managing everything and they're giving a return.
Wow.
So speaking of syndicates.
Goodness me. That wasn't anything to do with me, that syndicate, by the way. It's like, but I think that's an interesting way of doing it, because I know a few years ago, friends of mine were talking about doing it possibly because, well, it is that thing, isn't it, pooling together?
Yeah,
We've
definitely.
talked about that before as well, where, you know, families, certain, you know, different demographics tend to do that more. They tend to pull family resources together more, and we tend to like doing it all on our own, making it really hard.
Yeah, and if we all come together, we could do this.
I'm sure there's a song about that somewhere, and it stretches out far further than mortgages. But it's true, really, isn't it? Yeah. So what do you have? I mean, so I've got Rachel who works for me, and I know she'd love to buy a property with her boyfriend one day. How hard is it for the younger generation? Is it still pretty tough, or is it, because I always hear that it's quite hard?
I don't...
Putting you on the spot here, Pete.
No, but I was going to say, I don't know if it depends on age or where
or is that relative to salary and all those things?
And where you live in the country as well. Because if you're down here, I'd say it's anyone that struggles, unless you've already got a property. But you know, I have friends who didn't sell a house for a very long time. They kept their house that they outgrew, and then they've got to make this giant jump up the housing ladder, and it's been really difficult even for them. So there are plenty of examples of people who are struggling. I imagine it's not... Well, I was going to say about talk about the elderly population as well, but new financial products have come out, which I don't actually deal with directly. Equity release.
But equity release, isn't that a bit? I mean, I always think that sounds a bit scary. Equity for the elder generation, because I have heard whispers from people who've had experience that a loved one's passed on, and they've had an equity release on their property, and then they're left with quite a lot to sort out, actually. It's not that straightforward.
Obviously.
Depends on the case-by-case thing.
Again, it depends on the advisor that advised in the first place. And there are some brokers out there that I could introduce you to, even that would actually be able to chat that through, because and that's something where families would need to get involved. You know, it shouldn't just be the person whose house it is that's arranging the finance. It should be the whole family. So it should be all of them understanding it. Definitely from the outset. And there, from what I understand, this is not my subject, but there are a lot more products out there now. It's a lot more regulated, and there's a lot more choice. So
that's good.
Yes, but in terms of young people struggling, yes, I suppose it's harder to get a big deposit together that you probably need these days to actually be able to afford a house around here, and maybe they're all going to have to move to places where the properties are cheaper, if that's realistic or not.
I know. Are we still one of the most expensive places to live, Tunbridge Wells?
It's got to be up there, hasn't it? I mean, there are pockets of London that are a lot more expensive than down here. But, we've just had the development in the pantiles, and other places. I've seen one-bed flats for well in excess of 300,000, which does seem really, really high. It does,
doesn't it?
And as we talked about, these detached properties with gardens for well over $1 million, and it's the standard that people just expect. So yes, you've got to earn a lot of money or have a lot of cash in the bank to be able to do that.
And do you find when interest rates go up, that must affect the mortgages and what people are doing? And because obviously we had a little
it's a bit of a bump, isn't it? And it scared a lot of people.
Well, because we haven't had one for so long.
Well, funnily enough, the Bank of England base rate's 0.5%, and actually, when you look at the average over the last 10 years, it's probably been that. It just dropped down really low, and it's come back up to that. But then again, lots of circumstances outside of everyone's control at the moment, and one that we're still getting over with COVID. Who knows what's going to happen? You know? And that big ship caught in the Suez Canal. I mean, I'm going outside to sort of global situations here, but potentially as who knows what's going to happen? Inflation's high for a particular reason, but I seem to only remember seeing inflation starting to go up in September. And that's not a long time ago now. So a year ago, the chat or the topic seemed to be, we're going to go into negative interest rates, and that's only a year ago, and then it's now changed to interest rates are going to keep going up.
I know.
As soon as they can have meetings to push those interest rates up, they're going to keep flying up. So I have no idea what's going to happen. But if they go up, yes, there's obviously going to be a lot of inquiries coming our way, and we're going to have to help people as much as possible in that situation. And I guess it's going to come down to affordability.
Yeah, because do you see trends in the type of mortgages that people take out? I mean, I know for example, sometimes I want to be locked in with a fixed rate. I mean, that's obviously down to my own personal reasons, and you've got to figure that out. But what I'm getting at is there certain trends around that based on what's going on in the world, you know, where people are a bit more bullish with trackers, and then they're not, and they want to be on fixed rates. Well,
funnily enough, I mean, I suppose in the last 6 years, I've only been around for the low interest rates. So people are far less interested in the trackers unless they
of course,
know something in inverted commas. I don't see how anyone could know what's going to happen with interest rates because they're voted on by a select committee. But really, I suppose the trend for, if we're talking about trends, if people's circumstances allow a 5-year fixed rate, that tends to be the direction that they go in, and pretty much has been since I started the company. So it really does depend on their own situation. But even 10-year rates are starting to drop. And it was in the paper just a couple of weeks ago that the Lloyds Banking Group brought out a 10-year fix that was lower than 2%.
Goodness me.
Which is unheard of.
That
so,
is. Good old Lloyds. I didn't get offered that one. Did I? Did I get offered that one? No. What's been one of your most interesting projects that you've ever had to work on in the last 6 years? Oh, that's a tough one.
That is a tough one.
Well, I can't just let you off the hook here, just asking you questions about all these things you're knowledgeable about.
Yeah.
But no, what has been really sort of a juicy project?
Well, I like cases where someone's got either a big portfolio, or they're doing something quite interesting with the property. So one of the interesting inquiries that I've had recently, which hasn't developed that far so far, it's just been a conversation with a client. So I can't claim any credit to actually organising or sorting this one out, but it's just someone who bought a few ex-bank buildings.
Wow.
In the centre of Reading, and he was looking to redevelop those, and he just had so many ideas for it, and he was just extremely clever.
Yeah.
Even though he denied being clever at all, he was extremely modest. I wasn't sure how genuine that was. But I don't see how you can claim that you're not clever when you're buying such expensive buildings and you have all these amazing plans for them. But I think he was smart enough to know where his limitations were, and using all these other experts that he just knew in his own community, builders and planet surveyors and architects, to think about how he could maximise what the profits that he was going to make from the property. And he wants to hang on to them. He wants to redevelop them, create a lot of residential housing, multi-storey flats, that sort of thing, above commercial. So it was fun for me just to actually start researching that and finding the lenders that would help.
Does it ignite and inspire you to do things? Like, do you sort of think, oh, I'd quite like to do this? Or,
actually,
or were you like a mechanic where you fix everyone else's cars and yours has got the exhaust hanging off the back?
I'd like to think.
I know you're not like that, Pete, at all. But...
No, I'd like to think I'm not like that.
You're not.
But actually, I'd like to learn more this year. I mean, I'm meeting more and more developers these days, and I'm finding them quite interesting to speak to because they do look at things in a very different way to the average person, and that makes you look at money in a very different way, and for whatever reason I find that subject interesting. So yes, if I can find the sponsorship to start my own little thing, that would be
a little
brilliant.
syndicate.
Yeah, it's just coming up with an idea and having the right contacts. And knowing also that the market's safe, and that's a whole new can of worms, isn't it? Really, is the market safe at the moment? And some people say that Tunbridge Wells is always safe.
So lots of people say that,
Yeah.
and it kind of hasn't been proved wrong yet.
It's true. Yeah.
But it's, I literally was born here. I was saying to my friends at the weekend, I was like, oh my God, I literally was born here. I've not moved at all. I've not gone anywhere.
Yeah.
But no, it really has been the case in Tunbridge Wells. It does seem to be good investment.
Yeah, I remember maybe house prices taking a bit of a dip.
They did
in
recession.
in this recession for a little while, and then they just went
Bounced
straight.
back.
They just bounced straight back up again, didn't they?
Yeah.
And I don't know when they've gone backwards since then.
Yeah, I guess it's that, much like trading, isn't it? It's just judging the market or seeing something come up. It's like you say, not everyone can read the market, certainly not properties, but you've got to be brave, I suppose, haven't you? Especially if you're an investor or developer.
You've got to be brave, and you've got to be... I was going to say you've got to be organised, but some property developers I know don't seem to be. I would say that obviously you've got to know people and you've got to get the paperwork done.
Yeah.
And maybe at least if you have a team that gets that side of things organised, then you've got a chance.
Yeah. And with clients as well, because I'm always interested in this. I'm always interested in how people grow their businesses. So if you've got a client and you're working with a client, there's a lot of time and effort that goes into it. And then what if nothing comes of it?
Good question.
Well, that I just feel bad. I just think, I'm not asking for behind the scenes, but that must be quite hard to invest your time in something and then it doesn't come up. I suppose it's the same with anything really, isn't it?
It's a bit like having faith.
Yeah.
And it actually is.
Yeah.
So over the 6 years, I think I've been messed around. I could probably count it on one hand,
That's good.
Times. Most people don't go out of their way to mess you around.
Good.
Some people will use and abuse, but it's so rare. Or I've been lucky, but we've got a bit of a trust model that's set up. So in terms of fees, we don't actually charge anything until right at the end of the process. So if once someone's got their keys, basically, if they're buying a property or once the money's gone into the bank and they've changed lenders when they're remortgaging, that's when we charge. So it's only on completion.
Yeah.
So we could go the whole duration and it could be through no fault of our own that it falls out. But I've set it up that way on purpose as more of an incentive to keep us involved throughout the process, which could be a little bit masochistic, but we just we've got several parts of the process. We're responsible for getting the offer with the lender, and once it's moved from offer, then the solicitor takes over. And there could be a legal issue with the property that we are completely unaware of.
Exactly, that's it. That's what I mean. It could be something that you can't do anything about.
That's right, but it doesn't happen that often. And I was looking at the statistics actually in the whole industry. I think there's, I don't know what you'd call it, maybe a burn rate or a failure rate of maybe quite high actually, around 20 to 25%.
Wow.
Of applications that don't make it to offer.
Yeah.
But then again, sometimes we do have to have a couple of goes.
Yeah.
And it might be, or it's generally to do with the actual property itself.
Right. Okay.
Rather than the client's circumstances, unless something dramatically changes. So
and with growing the business, you've obviously mentioned that you've got 2 people working with you and someone new's coming on in April. That's great, but what have you learned about yourself over the last? Because it must have been hard. You've been busy, but it's been a hard, interesting market, hasn't it? So
what have I learned about myself? That I'm impatient and I want to grow the business, despite having this sensible voice at the back of my head that says just keep it safe and make sure you've got enough money in the bank and make sure that there are definitely enough customers there, because again, this faith thing, coming back to that, the faith is also, where are these clients going to come from, because we have no idea at the beginning of the month. It's not like running a business with direct debits. We don't have a guaranteed number of mortgages that we're going to do a month. It's just new inquiries and they happen to come in. And the trend has been upwards for us for the last 6 years. So we've been helping more and more people, and more people are hearing about us. So that's translating to more and more business.
Yeah.
But it almost seems like chance still.
Yeah. And when you say more and more people are hearing about you, so where are you based, Pete? Where are you based in Tunbridge Wells?
Well, the last 6 years from home.
Yeah.
And obviously I'm not going to announce where that is, but...
No, don't do that. Don't do that. Everyone will be round for a party.
Exactly, yeah, or a cup of tea at the very least. But yes, there is a physical location now in the Pantiles.
Yeah.
And this opens up a new talking point,
Yeah.
which is where we're going.
Yeah.
Which is the finance hub. So a lady in Tunbridge Wells called Gillian, who I need to introduce you to, actually.
Yes, please. I look forward to meeting you, Gillian.
Yeah. Has had an idea. I don't know how long ago she had the idea, but she came to me with it a year ago.
Yeah.
And I'm pretty sure I was one of the first people she approached in Tunbridge Wells. Mm-hmm. And this is her. This is the original. So she's opened up a workspace. With a receptionist, loads of champagne and wine and beer in the fridges, soft drinks as well, decent coffee machine. Yeah. So you can walk in there as the average person. Yeah. And theoretically, any financial need that you might have, you'll be able to come in there and have a quick chat with the receptionist and be put in touch with the right person. So, I don't want to leave anyone out, so I'm probably best off not trying to remember every single type of business that's in there. But for example, but it's all financial services. Yeah. So services like mine and complementary services and auxiliary services. She hasn't gone as far as solicitors or accountants. Yeah. But that's because there are so many in Tunbridge Wells. And they're not specifically necessarily financial services that we could recommend. There are so many different niches within those categories. So,
what's it called?
What called?
What's that?
Oh, the Finance Hub.
It's the Finance Hub.
Just to say it again, Finance Hub.
So so if people want to find out more about that, is there a generic website that
there is? I think it's the financehub.money.
Okay. But if people want to find you individually, they can find you through your own website as well.
We've got our own website, amorfinancial.co.uk.
Amorfinancial.co.uk.
Yeah, or if you just type Amor Financial into Google, it'll definitely come up. Or even mortgage brokers into Google, Tunbridge Wells. Yeah. And that will come up there.
What do you think people... Because the other thing is with broker... I mean, anyone can have a mortgage broker, can't they? It's not just an exclusive thing. I think, some people seem to, not everyone, but some people think like, oh, you only have an accountant if you've, there's this sort of limitation some people put on themselves.
Yeah, maybe.
and
That's
it's like, where I think, they think they have to go and do it themselves unless they're borrowing sort of hundreds and hundreds. I mean, most things are hundreds of thousands of pounds now, but do you know what I mean? I think anyone could have a mortgage broker because of all those reasons.
And that's a perception that's changing as well.
Yeah.
And actually, because of those changes that came about in 2014, the ones that I mentioned earlier, I think it's been a lot more expensive for banks to actually offer advice within the banks.
Yeah.
So a couple of barriers, I suppose, would be that you have to book an appointment during a working day. Yeah. You have to physically go in there a lot of the time as well if you actually want to meet your financial advisor in your branch. Yeah. And quite often you have to book several weeks in advance, so you can't just get something sorted that quickly.
Absolutely.
So the banks, HSBC were actually one of the last to send their business to brokers. They didn't like the idea for a long time. And now they want to be one of the biggest banks for intermediaries.
That's interesting, isn't it?
Yeah, and it just shows the way that things have gone. It is too expensive to have that in-house. Yeah. And I don't even know what the stat is now, but as I came into the industry, I'm sure that it was more like sort of 50-60% of people that went to mortgage brokers. Yeah. And then gradually that changed. So when I was reading about it most recently, which was still a few years ago, it was pushed up to 70% of people going. Wow. I'm sure it's probably more like 90% now. I'm sure most people actually find the broker. So hopefully that exclusive thing is going away. And there's a lot of competition for us out there. So
what sets you aside from? I know you're very modest, but what sets you aside? Would you say why would you be a good fit for? Obviously there's lots of great people out there. But why would you particularly sort of say that Amor Financial is a good place to come?
Well,
other than yourself, obviously.
We've focused on trying to make things as easy as possible.
Yeah.
So, in some cases, clients sent forms. We don't send out forms. We complete everything. So we ask for. Our process goes that we ask for the standard documents that we're going to need at the beginning of the process anyway.
Yeah.
So you might as well send them over ID, proof of income, proof of address, and bank statements. So we look at all of those, and a lot of the information contained in those documents, we just extract and put into our own fact find. So that just saves us sending forms out to clients. And
Absolutely.
There's less repeated information. But also we get to them really quickly as well. And our first chat is a lot more casual. It's an overview of the situation. Can we help or not? A quick assessment.
Yeah.
And for speed, that works really well for people. People are busy.
Yeah.
They've got so many things to organise now. They've got so much information flying at them, and they just want something easy. So I like to think that we make that process really easy. We take the problem off them.
Yeah.
And then we're communicating over the phone and via email, but it's in snippets, so you don't have to commit to an hour or two.
And I can vouch for that. You're very speedy, and I think the forms, like filling in forms, people, certainly people like me, it's a real godsend to have someone do that, because I just get panicky when I have to do forms anyway, for starters. Which I'm not the only person.
I've learnt a lot about forms over the years.
I bet you have. So if people want to find out more about you, the best place to go is your website, but they can also find you through the Finance Hub. And what can we expect to see from Amor Financial over the next 12 months? If you manage to rein in your gusto, it's going to grow, isn't it? There's going to be more stuff, more.
Yeah, I'd say actually one area that we're weak is advertising. So it's actually trying to put our name out there a little bit more. And
what a beautiful way to end this podcast. It's trying to get the name out there, and you're doing just that right now.
Yeah.
But I think more people knowing about you and talking about what you do. And I think also you are very knowledgeable. You're very knowledgeable about things, and you're always very happy to answer questions. So I think that's the other thing to say, is that people can always just phone you for a chat, can't they, really?
Yeah. Yeah, a focused chat, of course.
A focused chat, not just
a chat nonetheless. Yeah.
No sort of random cups of tea. Focused chats is what we like. Thank you so much for coming to talk to us today. And I'm looking forward to getting some mortgages with you at some point in the future for sure. I know it's going to happen, definitely. Thank you so much, Pete.
Thank you.
Thanks.
Thanks.